What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. And every Friday here on the Investor Channel, we recap all the major news and the technical chart patterns from all the major Faang stocks, which are just absolutely skyrocketing. When we get to the technical chart pattern, some of you are probably wondering if you need to take profits. Some are you wondering maybe you missed this rally. Should you buy back in? When are we going to get a dip and maybe a dip buying opportunity? All of that will be answered when we get to the technical chart patterns, and it's going to be so easy. You're going to look at it and be like, this makes my job so much easier as we go forward. But before we get to that, better kick things off like we always do with Meta Platforms. Start the week at 266. Is this right? This stock up 5.5%, just closing that gap on that technical chart. Up 5.5% to finish the week, over $281 per share. FTC chair and hack Lina Khan, did I say that out loud? Lina Khan ignored ethics advice in refusal to recuse herself from a Meta case. Now, this dates back to, I believe it was late last year, maybe it was early this year. Meta was being sued by the FTC to block a $400 million purchase. Okay, $400 million is a lot of money. We're talking about a $700 billion company buying a tiny app maker on the Oculus system. The FTC stepped in. Lina Khan was advised by her staff she should recuse herself. She was advised by her staff that she would lose this case in a California courtroom, and she did. She lost this case in a California courtroom. Her staff told her she should recuse herself. She didn't. She's an embarrassment to the federal government. She's an embarrassment to the FTC. She's an embarrassment to the entire country of the United States, and she should be fired, period. Meta introduces speech generation AI model voice box. This is actually kind of interesting. So what this is going to do is it's going to be able to generate your voice. So sometime in the future, if I don't really feel like showing up for the Faang Stock Recap show, it sounds like maybe I'll be able to type it out. If I wanted to like type this show out, maybe I wouldn't be able to have myself sitting down here in the corner, but I might be able to type this show out and then, or maybe even generate that with AI too. I wouldn't even have to type it out. And then my voice will come on and talk and produce high quality audio clips of the show. My guess, so there's a lot of applications for this. I think one of the, maybe not the most interesting, but one that came off the top of my head is there's going to be a lot of podcasts, I think, that probably implement that. So you have a voice and you have a popular host maybe, or maybe you're just one of these podcasts, you're just trying to spit out content. You're going to be able to capture a voice, and you can do this to a certain degree now, but it sounds a little robotic. My guess is this will get perfected to the where the human ear might not be able to tell, is this an AI generated voice or is this the actual person speaking? That is where we are going when it comes to AI. Meta's platforms, Instagram rolls out broadcast channels across the globe. Essentially, what I think this is allowing you to do is you can say you have like 5,000 followers or something on Instagram, or they join your quote channel or whatever. You're going to be able to basically kind of broadcast out to them in different ways, including text message, images, polls, and more. So you're going to be able to broadcast out instead of maybe having to go through and DM everybody individually. You're just going to be able to broadcast this out. And certainly if there's someone on Instagram or brands or whatever that you follow, and this is exciting because it's going to allow them to push their content to you directly. And I like these kind of iterations that Meta is doing on their already existing and wildly profitable social media platforms. Moving on to Apple. Start of the week at 181. This one topped a new high, although closed below it to finish the week close to $185 per share. The company notched a record close as the bulls continue to cheer the stock. You'll look at that from a technical perspective. The stock's getting in that rarefied air. Moving on to Amazon. Start of the week at 124. Drifted a little bit higher, about 1.2%. Finished the week at about 125.5. iRobot, which is the quote vacuum maker that Amazon is trying to acquire for, I think, a shade over $1 billion. A little more than a shade, about $1.7 billion, has cleared regulators' approval in the UK. And so that probably allows them to have easier clearance as you get all the way to maybe the European Union. They might even already approve this deal, and eventually you get here to the United States. Now, I was watching, don't ask me why, but I was watching, a lot of presentations on Amazon, and they've got these new robotics. They've always had robotics, or they haven't always had robotics, but they've had robotics in their warehouses for a long time. They're working on new ones. And during my research, which is now over at Brownstone Research, and I'll have a link down in the description below if you want to join that newsletter that I send out on a daily basis. Part of that research led me down a rabbit hole of Amazon. And I will just tell you right now, I have to retain some of this for the strong paying members and the people at Brownstone Research. But the iRobot acquisition by Amazon is not about selling vacuums. I'll just put it like that. Now, AWS weighs using AMD's new AI, the MI300 chip, in their data servers. There's a couple of reasons why Amazon is doing this. Also, I am going to retain some of the information and the knowledge that I have drug up, but AMD had a presentation earlier in the week to roll out this AI chip, which is, I think, currently kind of in preview mode. It won't get to full production and out to kind of the hyperscalers like an Amazon until likely Q3. What we do know about Amazon is a pretty well-known fact is they are not getting huge allocations of those NVIDIA GPUs. Microsoft is being taken care of. Oracle is being taken care of. Some other even smaller players like an IBM, and then some private companies are getting taken care of because guess what? NVIDIA's smart. They want to set up their own cloud. They have all these links and switches that they want to sell you on top of that. Amazon doesn't want to play that game. Amazon's going to build their own custom AI silicon, but I tell you what, AMD coming to the park could get a customer in Amazon, but we have not confirmed that as of yet. Moving on to Netflix, for the week at 420, up 2.7%. Finished the week at 432. That stock just continued to roll too. Now, Netflix is to debut its first pop-up restaurant. Yeah, you heard that right. Netflix used to sell DVDs, transition into streaming videos. Now they're getting into the restaurant business. They're going to pop up in Los Angeles for a limited time basis to sell you what's called Netflix Bites. Now, this is interesting because they have a number of cooking shows on Netflix, and chefs, celebrity chefs, if you will, Curtis Stone and others are going to show up there and create a dish for you. And it's going to be kind of this immersive experience where you get to try some of the food from the chefs that you watched on TV. I actually think this is pretty freaking cool. It's not going to show up at the bottom line or the revenue, but I like what Netflix is doing. Moving on to NVIDIA, and speaking on moving, this stock started the week at $390. Everybody's saying this stock is overvalued. I mean, maybe it is. It probably is, but nobody cares. This stock was up another 9.2% to finish the week close to $427 per share. That's not even as high as the 52 range. Takes us up to $437. AMD, which again had a AI event, or they were rolling out, they had some CPUs. They had Meta on stage, Microsoft, Amazon, the typical players and the typical customers. They did roll out an AI chip, again, the MI300, which is scheduled to launch, I think, Q3, probably more than likely in Q4 later this year. AMD retained a rating from Wells Fargo despite no big customers named for its new AI chip. So obviously, as that relates to NVIDIA, they are the only game in town other than there's some smaller players, but Google has their own custom silicon. But for now, NVIDIA is the Michael Jordan of the GPU business, and they're making the baskets. Intel in talks to be the anchor investor in chip designer ARM. Put that in your x86 pipe and smoke it. This is an interesting turn of events just from that sense. Also, as you recall, that ARM was potentially going to be acquired. In fact, NVIDIA and ARM had a deal in place. I think it was around $50 billion. Regulators, I tell you what, I'm harsh on regulators and I'm harsh on regulation. I'm pro deregulation in general, especially when it comes from an investment standpoint. I tell you what, regulators, they have a loose case most of the time. I think NVIDIA acquiring ARM probably was a case where regulators stepped in and made a reasonable decision. SoftBank retained ownership in ARM. They're going to IPO it likely later this year. Certainly if hardware like NVIDIA and AMD stays hot, they would be wise to go IPO later this year. They're going to sell off, I think, only a portion of the company. It's not going to be one of these complete liquidations, and Intel potentially being an investor there. Moving on to Google. Start of the week at 122, just up fractionally. Finished the week at about 123.5. The company is selling its domain business to Squarespace. For those, I used to have a client actually when I was doing a lot of like websites and website design. I had, occasionally I would pick up a client or two. Really, it was just they knew I did websites and I was more or less kind of doing them a favor. I had a client once that had their domain registered through Google. I think initially what Google was doing is obviously they sell ads, okay? And who buys online ads is people that buy domains. And so I think initially what Google found is let's register somebody through a domain. We'll be able to, send them advertisements for Google AdSense and Google Ads. They're two primary ways to make money. Basically, they're really their only way to make significant profits over at Google. I think what they found over time is they've reached all those customers, and the domain business is very, very low margin. You have to upsell those customers either into ads or like a mail service or cybersecurity or something like GoDaddy does. And so what Google probably found was, let's just sell this to Squarespace. Everybody knows about Google Ads, and we'll move on from there. Probably a good choice. Not something that'll show up financially, but an effort and a demonstration probably of Google continuing to streamline their business, which I think even in a small way like this, probably good. Now, Google potentially going to be slapped with a massive EU antitrust penalty. This is going to be roughly $8.6 billion. Apparently, the regulators may, and I think that is M-A-Y, may push for a breakup of Google's ad tech business. But here's what I want you to ask yourself as an investor. If you're a regulator in the EU and you're constantly whacking the tech giant here in the United States with fines, in fact, they previously slapped Google with a $4.3 billion euro fine for their Android business, and now they're going to slap them with a little 8 billion euro fine. Are you really going to want to break that business? The fact that you it's like a little piggy bank, that you constantly go back to. Are you actually going to pick that piggy bank up at some point and break it? No, it's the piggy bank. You're going to let it continue to get refilled. You're going to threaten to break up their ad tech business, but they would be fools if they actually break it up, because you're going to be able to consistently fine. If you break the business up, are you going to be able to fine them $8 billion one day? Probably not. So you got to follow your money with these things. We'll see if the regulators have the balls to break up the ad business over at Google. I'm not convinced they do. Moving on to Microsoft. Start of the week at 328, up over 4%. This one back into rarefied air. You'll see that when we get to the charts. Finish the week at 342 on Microsoft. Chinese President Xi Jinping said to tell Bill Gates AI tech from the U.S. is welcome in China. Obviously, you have those United States, and I think it translates over into Europe as well. The sanctions on the lithography machines and really the most advanced AI chips made from NVIDIA. They are not allowed to be sold into the country of China. They have to be clocked down or have to be altered in a way to where they fall underneath the sanction. I mean, NVIDIA is still selling GPUs into China. They just have to clock them down or do something from a hardware perspective. Look, it's hard to, first of all, like, what is Bill Gates doing in China? Probably trying to get money. And does the U.S. trust China enough to bring their AI tech over there? Or is China doing what they're always trying to do? And that is essentially acquire IP, replicate it, often make it cheaper, and, proliferate it out into other parts of its country and maybe potentially the world. I don't know. Depends on, I'm not trying to influence anybody here. I don't really care, honestly. I tell you what, if China was open and you could just sell into it, it'd be great. NVIDIA would probably be $1,000 per share. I don't know. Geopolitics is tough. I just know here from the standpoint in the United States, we're obviously coming on to a new election cycle. Just doesn't seem like the China and the U.S. tensions will resolve themselves no matter what happens there. Microsoft and Mercedes to start an in-car test of ChatGPT in the car. To think of all the liabilities out there if ChatGPT tells you the wrong way to go in your Mercedes. What a beautiful interior, though, in that Mercedes. Now, the U.S. judge temporarily blocks, kind of buried the lead here, temporarily blocks Microsoft from completing an Activision deal. So the FTC sued, and forgive me, I'm not a lawyer. I don't really know the order of these things. Essentially, the FTC, I think, sued to block the deal. There is a temporary injunction. Now, Microsoft has an agreement with Activision that expires relatively soon, to where if this deal has not been approved, Microsoft essentially has to go back to the table with Activision. Now, they can stay on the agreed upon price of the acquisition. They can renegotiate that. The thing that tends to happen is we increase the breakup fee. So I think right now it's set at about $3 billion. What Activision could do is say, if the deal falls through, regulators don't want this, then the breakup fee might go a little bit higher. We'll see what happens here. Now, Microsoft back in court with their army of attorneys. They're looking for at least a 5-day hearing out here in the great state of California. Now, judges tend to get an interesting rap out here in California. I will say that the court system has been transformed just a little bit out here in California. The other thing is judges tend to favor technology out here. If you are based in the Silicon Valley, those judges are not stupid. They tend to not want to bite the hand that feeds it. We saw that earlier this year when Meta was taken to court by the FTC. A judge out here in California absolutely threw that out and said, no, absolutely not. You can't stop Meta from acquiring this company. And so we'll see if the same thing happens here, but I'll say it again and again and again. I will take corporate attorneys over government attorneys any day of the week. If you're a corporate attorney, you're in the NBA. And this is no offense to any attorneys out there. If you work for the government, you haven't quite made it to the NBA, because that's where all the money is, okay, is at the corporate level. And so we'll see what happens here, obviously. Now, moving on to Tesla. Started the week at $247, up 5%. To finish the week over $260 per share. Finally, people are starting to put some numbers to Tesla's new supercharger for all business. Obviously, we saw the news from Ford. We saw the news from GM. Everybody's adopting Tesla's little plug-in cord, which after using other competitors, look, Tesla has the best technology here, has the smallest cord, and it'll become ubiquitous in the EV charging space. Now, here's the interesting thing, though. Morgan Stanley says, and is modeling different types of scenarios where if, you got 10% EV mile penetration and Tesla's share is 50%, 70%. But I think they miscalculated here. So the lowest operating net profits that they projected was at 30%, and they would say that would have about a $3 per share impact on the business. They went as high as 50, 70, and 80% operating profits. The problem is Elon Musk a year ago said that the company, and again, this could change. This was a tweet by Elon Musk. There's nothing, in financial documents that really represent it. And obviously the operating margins on the charging business will probably change over time. But he says they aim for 30% gross margins or 10% profitability, otherwise known as operating margin. And so these estimates coming in from Morgan Stanley assume on the low end 30% net operating profit, while as late as last year, Elon Musk saying that they are working at about 10% operating profits on those chargings. Now, I think in the long run, it's going to be a wildly profitable business, and superchargers from Tesla are going to be the dominant player, at least in the short and near future. You start looking out maybe a decade, 2 decades down the road, I would have to assume big oil is not going to let their gas stations sit on the side of the road and not have chargers. Maybe Tesla rolls into some of those locations. But I think over the next probably 5 years at least, Tesla is going to be the dominant charging business. And even if you play with these numbers from Morgan Stanley, there's several dollars likely of benefit for Tesla from an earnings perspective. Moving over to the technical segment of the show, very important technical segment of the show. Here's the S&P 500, folks. We have been making higher lows, higher highs, and with absolute precision, we've been butting our heads on this line here that's kind of in dark green. So guess what? This trend is either going to break and we are just going to continue to move higher, which seems unlikely, but certainly it's not improbable. I think the more likely scenario is this is finally when these markets take a little bit of a breather. Now, there's two resting points. If those of you out there that want to buy the dip, there's oftentimes in these channels, there's like an intermediate area where occasionally you come back. That is probably where I would start. And again, not giving out financial advice here, but if I were to say, okay, if we're right, okay, the trend, the higher highs end here, and we're going to come back down here and make a higher low, I wouldn't necessarily wait till it gets all the way to the bottom of the channel, because occasionally maybe you don't get all the way to the bottom of the channel. And I'm not trying to pick tops and bottoms. I would step in as you approach this red line here. Again, if you were to buy 10 shares of the S&P 500, maybe you start here with 2, continues to make a further pullback. That's when you add. Your full allocation comes here when you meet the bottom of the channel. Very risk-averse investors would probably want stop losses at about, we'll call that just 4,100 on the S&P 500. Less worse investors would probably want stop losses down here at 3,800, which seems like a mile away. But when you make these technical moves, it really wipes out some of the downside risk. I'm not saying we don't have downside risk. The other thing that could happen is you do have a really prolonged downtrend, but all it is kind of widening out the uptrend that you happen to be in. That is why if I were to step in, I would have stop losses at some of these upper levels, because if you start piercing through these, obviously you move in one direction, it raises the probability that you continue to move further in that direction. Moving on to Meta, we talked 4 weeks. Once you finally got above this 240, well, let's call it 245 level, this gap was going to close, and tell you what, it pretty much did. We had about a 16% rally. This is hopefully some of you participated in this, because we really well telegraphed that here on the channel. I'm not trying to pat myself on the back. I'm trying to make you some money. And so hopefully some of you did play this gap. I would have closed out halfway through the channel. We're like more than 3/4 away from this channel. I would have closed out today. But it doesn't mean the rally is over. And some of you are like, well, okay, I missed that rally. I want to dip buy into Meta. Well, right now, this is the trend, and it is the steepest uptrend. And when does it end? When you cross over and you have a close. Oftentimes, it's some like big impulsive candle, so it can happen like in one day over the course of maybe 2 days, but the logical area of kind of a back test is actually back to the 245 level. I tell you what, earnings are still a mile away. So that's kind of the question where we're at. We're over a month away from earnings. July 26th is the date I have here. So that's the question we're going to ask ourselves. Are we going to set up at all-time highs on all of these stocks as we head into earnings? Or are we going to pull back? Is worry going to creep in that Meta's earnings aren't going to be that great, or guidance or whatever, and we're going to have those pullback opportunities? That's the question we're going to be asking as investors over the next, we'll call it 40 days or so. Now, parabolic move on Apple from the lows back in January, really, all the way to the high. That's a 50% move in a nearly $3 trillion company. Very similar to Meta. The trend is your friend. Sellers tend to dry up at these areas. You're looking for some kind of bend at the end. You get that bend at the end. That's your signal that the trend, it doesn't guarantee that the trend is over, but the bend at the end tends to be a good symbol for that. We're looking for the bends at this point. Now, moving on to Amazon, also very much in a very steep uptrend. Okay, these uptrends can't last forever, guys. Overhead resistance for Amazon is up here at about 133, a little bit higher, about 145. This one's still got a little bit of airspace before we get to that. A bend on Amazon would likely suggest that trend is over. Pullbacks to, these areas probably could be bought. Now, moving on to Netflix, there's a small gap in the chart up here from 458 up to 513. And, that's what we're trying to do. We're kind of at the bottom of that gap. Another trade opportunity, kind of like a low risk trade opportunity, is put your stop literally a couple of dollars underneath the share price. So you're risking $3 to make like $80. That's what you're doing there with Netflix. Again, you could be wrong, but that's why you set your risk reward up that high. So if you're wrong once or twice, it's not that bad. All you got to do is hit once, and there's math that would solve this for you. Your batting average doesn't have to be that great when it's like a 3-to-1, 5-to-1, 10-to-1 risk reward ratio. And especially when you have gaps in the chart, and you saw with Meta, those tend to fill. Now, moving on to NVIDIA, natural area where this stock would want to pull back is up in this area. Now, we've peaked over this area once over the last 5 years or so. So we certainly could have kind of a blow off top moment with NVIDIA if that hasn't already materialized. But the trend is still your friend. It has not bent. I would say with NVIDIA, there is a gap in the chart here. I'll zoom in so you can kind of see it. A pullback to fill that gap wouldn't be that alarming. It would be a break below these lows at about 272. I know that's a mile away from 427 down to 270. But when you go parabolic like this, you go from 130 to 427. It just stretches things out. And so just keep that in mind as an investor. If NVIDIA pulls back to like 300 or even a little further than that to like 250, it's going to look dramatic on the price chart, but it is about standard from a technical perspective. This is why you let the charts make the decisions for you. Because if NVIDIA makes that move, it's going to be panic on the blogs, panic on Twitter, panic all over the place. But on the chart, it's like, oh yeah, it's doing its normal thing. Like, let the chart take the emotion out of these things. Now, moving on to Google, butted up against resistance, clear resistance here. And it's kind of a range, I would say like 120-ish, plus or minus $5. Clearly hit resistance here. It is relying on either the market continuing to push higher, which again, when you looked at the S&P 500, seems unlikely probably, but if you do get that, you will retest likely all-time highs with Google. Pullbacks in Google are not concerning technically until you get below these lows down here at $89. I wouldn't be super excited though if we break through 103. Risk averse investors should put a stop up here at probably 115 or so. Moving on to Microsoft, also very much looking like Apple and Meta and every big tech stock. It's gone parabolic, pushed above highs. We've pulled back a little bit. Trend's your friend until this thing bends. A large bend on Microsoft, again, is going to look ugly. And the talking heads on TV are going to be like, oh my God, we went from 340 down to 370 on Microsoft. Well, that would just be the resumption or the continuation of higher lows. So we'll see what materializes. We're going to have a pullback at some point. It's how deep it comes. And the higher up you go, obviously, the deeper that next pullback can actually be. Now, moving on to Tesla. This one is looking like it wants to start looking like the rest of these stocks and start making potentially higher lows, higher highs. This is also the stock out of this group, I believe so, off the top of my head, is the farthest away from their all-time highs, all the way up here at 400 and we'll just call it $28 since that Elon Musk would like that. Momentum stays in these markets. And it doesn't mean momentum staying in this market doesn't mean that Apple like goes from 180 up to 250. Like it could mean that Apple pulls back a little bit and then continues to maybe retest the highs or touch them. That's enough because look, Tesla and Apple are running different businesses. They have different margin structures. I don't need to tell you that. As long as you don't have that big like market-wide pullback, Tesla can survive these other stocks having kind of like a little toppy formation, and Tesla could continue to rally. Although this also could be a conceivable spot where this stock stops out. Many of these stocks are in areas where conceivably they probably will stall out, but you wait for the confirmation. And depending on how risk averse you're trying to be, if you have the money in your account and you're trying to go to college or you're trying to pay for your kids' college or you're trying to buy a house or you're trying to buy a watch, the tighter up my stops would be. And that is how I would play the technical charts going forward. Folks, going forward, we'll be back again next Friday here on the Investor Channel. We'll have more for you coming up, and we're not quite on earnings eve, but we're getting there close. We'll have the large banks reporting in just a couple of weeks. Hopefully, guys, have a wonderful weekend. Be safe. It is a long weekend, I believe, for most people, as June 19th is a recognized holiday by most people, and the markets will be closed. Hopefully, guys, have a wonderful weekend. We'll see you again next Friday. Good luck with your investments.